Let's get across what happened not only in the session overnight, but what happened here locally this week. And for that, Scott Phillips from the Motley Fool joins me now. Scott, welcome. Just a general thought from you on where we sit in terms of market action, because again, it's just the way it is. We're being so dominated by headlines coming from the Middle East.
Yeah, it's been huge, Nadine. Good morning. Monday, Tuesday, we had nothing. The market was dead flat both days, and it felt weird, right? Because there's so much going on, particularly over the weekend when it came to announcements and other things happening. And then, of course, yesterday, the day before, we had some pretty significant falls. So some sense of catching up. Despite that, we saw the US market do pretty well. And we saw the NASDAQ in particular have a very good night Wednesday night, our time. So you've got lots of moving parts here. You've got the geopolitics of Iran. I mean, that's obvious, right? But we've got to still say it out loud. And then you've got the SaaSpocalypse, the kind of will it, won't it issues around what happens to tech companies in the context of that kind of story. And then you've got the kind of, the back and forth of valuations on the back of that, and a market that is around pre-war highs, which is kind of astonishing when you think about what's happened, what's still happening, and the risks for the future. I'm not going to say the market's right or wrong necessarily, but it's an ambitious market that says the market is worth X 5, 6, 7 weeks ago and is worth roughly the same today despite what's going on. Whether it's a case of too much optimism, whether it's maybe it's accurate optimism, by the way, maybe it's a case of what I think it is, which is just a punch-drunk market. The Trump backflips, the back and forth, the allegations, the pullbacks. Kind of like, what do you do? What do you think? How do you really factor that in? And so the market, I think, is almost looking through some of this stuff. And broadly, that's probably the right approach, not being whipsawed backwards and forwards, given Trump's propensity to change his mind. But I do think there's too much, maybe a little bit blasé, frankly. I'm not saying we should pay less, I'm not saying the market should have fallen precipitously, but we're still in a situation where 20% of the world's oil is blockaded. And frankly, at some point in the next month or two, if that's not resolved, even if it is, we face real supply issues, not just price issues. So, yeah, as a shareholder, I'm happy my shares are worth more than they were a couple of weeks ago. But I do wonder whether the market's been a little bit too optimistic, a little bit too blasé, given what we know, given what we see.
Yeah, I think you're not alone on that front, Scott. You know what our local market was not blasé about this week? Cochlear. I mean, have you ever seen a fall like that with such a big company? I mean, what is the problem? Is it that Cochlear did not sort of hint of this previously, or is it just, again, sort of that litmus test for, so things are going overall pretty good at the index level, but oh boy, we are still spooked.
Yeah, we are. A couple of things I reckon are going on, Nadine. You and I have spoken over the last couple of earnings seasons about the really huge responses the market gives to earnings that are meaningfully above or below expectations. The number of 30% falls we saw during earnings season, I haven't done the numbers, but I'm sure is growing materially. And there is that sense of, if you give me what I want, it's great. If you give me less than what I want, I'm going to be bitterly disappointed. So we saw an earnings downgrade, a big earnings downgrade, by the way, and a big reduction on last year. But when you think about a 40% price fall, what that infers based on the maths of investing, we all know this, even if you're not someone who does a DCF, the reality is a share price is the value of all future cash flows. It can only be that. And so when the market says every dollar from Cochlear from here on is now 40% lower than I thought it was yesterday, that is a massive reaction. I'm going to call it an overreaction. Now, maybe Cochlear was expensive already, and so maybe the fall was from expensive to fair, then from fair to reflecting the fall. Maybe that's true. But I don't think you can substantially support and justify a one-day fall of that magnitude, other than, you can explain it, I don't think you can justify it, and I guess that's the key, right? So what's the explanation? The market expected a lot. This was a highly priced stock, and when we see big earnings downgrades, the market tends to shoot first and ask questions later, and I think that combination is what we saw. I will say too, Cochlear blamed absolutely everything, and there is some sense of, I think, there wasn't a case of, look, this contract didn't happen, or that currency is a problem. They went right through and said soft markets, receivables out of the Middle East, gross margin pressures, currency conversions. It was everything, right? And kind of it's the kitchen sink downgrade. And the market gets really spooked at that point. Maybe the company is trying to say, okay, we're going to have a bit of bad news. Let's do the big bath, get it all out there now. But it does seem like across the board, there were no positives for Cochlear from that announcement. That being said, this is a company whose products are, other than, there's competition across the market, but these are not discretionary purchases, right? You either need a cochlear implant or you don't. And so that sort of downgrade, that sort of softness in sales, I'm tempted to think that it's probably likely to be temporary. I don't think all of a sudden there's 40% less cochlear implants required worldwide from now until Armageddon. So if that's true, you're probably going to see that bounce back. But the question is whether the price was already expecting way too much and simply a realignment of expectations was worthy, and that's probably part of it. But I do think this is one of the very best companies on the ASX. Long term, obviously cheaper price now, so you can go there. But think about, again, the product, you're a customer for life, literally, right? You know, I think surgery, you can have it removed at any point. The sound processors get upgraded regularly. There is always the chance of gene therapy or something else that dramatically changes the future need for cochlear implants, and that's always going to be the big one-off risk, a little bit like ResMed, frankly, with Ozempic. So there are chances that there is alternative treatments, but I think the fundamentals of the business are sound. The question is whether the price, the valuation, is the right price now. As I said, I think the market was dramatically overdid the fall. Doesn't mean necessarily it's cheap. It might have just been too expensive earlier in the week.
Yeah, okay, interesting one. Now, I guess on the other side of the ledger was Treasury Wines this week. So it's not going to be running Penfolds as a separate business, but it was, again, a pretty swift reaction to the upside to that news.
Huge. I'm a shareholder, by the way, so full disclosure on that one. But really big, long-suffering shareholder too, by the way. The shares were worth a lot less than I paid for them. So I think this was pure relief rally, Nadine, honestly. Speaking of the kitchen sink, Treasury had done that sort of thing 6 months ago, 3 months ago. I said, look, everything's kind of, it's tough. The non-Penfolds business is bleeding cash. The Americas business was flat. Penfolds demand was down. Everything looked really, really ordinary. And the key thing was there was too much stock in trade. They'd stuffed the channel in previous years. I think that's obvious. They don't say as much, but realistically what they're saying is we're not selling in as much as the warehouses, the wholesalers are selling out. What does that mean? The wholesalers got too much stock. So Treasury did some silly bugger stuff a while ago, shouldn't have done it, did it. And now the current management's having to deal with exactly that. But those depletions, as they call them, sales from the wholesalers to the retailers and consumers are up really strongly, including 40% for Chinese New Year. So the market hoping now this might be something to look forward to. That recombination of Treasury's businesses back into one, effectively now a regional rather than a brand-based change, is really interesting. I'm not convinced that the market knows exactly what's going on there. This is either the business saying, we think the brands we've still got, the other stuff, that frankly the rats and mice, are either worth something. It's probably not that. It's probably a case of we can't sell it. There's no point reporting it separately. Let's all do it as one business and get on with it. Now, I don't know that's the world's best strategy. I'm not running Treasury, so they can make their own decisions. But if these are bad brands, if this is stuff that is just bleeding cash or not worth doing or just simply being used for overhead recovery, this is still Penfolds Plus. Whether they call it that as a business unit or not, this is just a Penfolds Plus business, a Penfolds Plus strategy, at least in Australia and Asia. They do have some decent brands in the US, but the profit is all made by the Penfolds business. So I wouldn't be at all surprised if this is designed to, I won't say mask, but maybe just not kind of highlight specifically how bad the rest of the stuff is and show the whole business together. It is going to be less visibility for shareholders and for analysts, so we need to be aware of that. They're going to get, if there's one muddled combination, we're going to have to try and work it out. I think that's a bad move, frankly, but the business is going to have to try and work out where to from here. I suspect they'll still cull some brands, but I suspect they'll cull them within this new structure where we can't see as easily what's being done behind the scenes.
Are you remaining a holder of the stock, though, that all being said?
Yeah, I think so. I think that the price that it's up obviously this week, but yes, I think it's a buy. Frankly, it is just so incredibly cheap. Also, all the bad news was priced in, and kind of back to Cochlear, right? Everyone was pessimistic on Treasury. I love being an optimist in a room full of pessimists, right? When everybody else is miserable, I can often see, I hope, some value around the place where I can look a little bit further than others and say, you know what, this looks tough right now, but is the Penfolds business valuable? Yes, I think it is. Is the US business good? Yes, I think it is. Is the other business rubbish? Yes, I absolutely think it is. But broadly, that Penfolds brand strength, growth, margins, the great opportunity in China remains, I think, really, really attractive. And the current price, even after the 17% jump, was it Wednesday, I think, this week, it still remains, I think, a really attractive idea if those things play out. Now, it'll take a while for sales to get back to normal because they had so much stock in warehouses. It seems like Treasury have negotiated pretty much like a 2-year restocking program with those wholesalers saying, look, I know we sold you a lot of stock. Can you please keep buying stuff? We'll look after you. You sell out a bit, we'll sell you in a bit. We'll work it out over time. That seems to be the strategy. So I think sales are going to take a while to recover. But I think long term, as long as those depletions from the wholesalers to the end consumer remain strong, it tells you the brand is strong and sales will return. If that's the case, I think today's price is pretty cheap.